Buy, sell or rent your property with Century 21 and you could win a brand new 2-bedroom apartment on the Sunshine Coast in Queensland. Visit c21win.com.au for your chance to win.
Welcome back to Your Property Empire. Well, joining me on the show tonight is Eliza Owen from CoreLogic, and we've just been joined by Charles Tarbey, Chairman and owner of Century 21, Australasia and PNG and God knows where else. Now, you've kindly brought in the numbers. This is the interesting bit. Do you want to take us through the numbers? We'll show up houses up on the screen as well.
Yeah,
sure. Take us through the main ones.
Okay, so what we've got is our year to June and quarter to June capital growth data alongside the June rental yields and median values. So the strongest annual growth rate was in Melbourne, which is following the Sydney market by a lag of a few months. It's important to note that the Melbourne market actually peaked in January of this year in terms of the annual growth rates. And so we're starting to see that rate ease now. Similarly with the Sydney housing market, you're seeing a very strong annual growth rate, but it was about twice that number the same time last year. And the Sydney housing market peaked in about September 2015. On top of that, annual growth in a few of the markets have been quite strong, particularly ACT and Adelaide, and Hobart as well had more subdued growth in the year to June. It's important to remember with the ACT market that strong annual growth rate is coming off subdued growth rates over the last sort of 5 years beforehand. And the rental yields, again, quite strong in the more affordable markets, but we can see that Sydney and Melbourne rental yields are very low, not just to a function of the high median values and high values in these dwelling markets, but also the dollar value rents have been coming down as the market is starting to adjust to supply. And in the Darwin and Perth housing markets, the growth rates are negative, but they're actually softening. Finally, the growth rates have been negative in terms of annual growth since about March 2015. So we're finally starting to see those markets perhaps come to bottom of the trough there.
Now, Charles, you're using CoreLogic data as well as the Century 21 data. Any other kind of takeaways from there at all?
No, it's very much in line, and I think when we look at the Perth market, Darwin we expected a change, and we also expected a change in Perth. And I think that I'm not seeing the softening yet in Perth. There are still offices there I'm talking to that are struggling in terms of vendors and their pricing. There's quite a few properties now where it's negative equity, which means that people are either not going to sell if they're forced to sell, and that could help level it out. That could help, but that's only just sort of starting to filter through right now.
Now we'll quickly jump to the unit market and run through those numbers quickly as well. So often they're just coming up.
Yeah, sure. So again, the Melbourne unit market performed quite strongly in the year to June. Again, we saw a discrepancy in the growth rate between houses and units in Melbourne at the peak of the cycle, but those are starting to catch up to each other now. Sydney units performed quite well. More subdued performance in the unit market across our smaller markets, again, ACT, Adelaide and Darwin, and due to that increasing affordability in those markets, the rental yield is becoming stronger there as well.
Now, the other graph that we'll just pull up quickly before Charles's section is about capital growth versus the cash rate. Obviously, a lot of people think as soon as you drop interest rates, then the capital growth rises. Do you want to take us, and not everyone's going to understand a graph like this, do you want to briefly explain it?
Sure. So what we're looking at is the quarterly growth rate of Sydney dwellings versus the RBA official cash rate. And I've highlighted there the succession of cuts that took place at towards the middle of 2015, when I sort of believed that the capital growth rates would start to ease. And then after that succession of rate cuts, we saw almost an extension of the boom in the Sydney dwelling market. Now, Australians, some research suggests that we have price elasticity of demand of 1 or more, which basically means the more income you have, the more money is available to you, the more likely you're going to spend on housing. So I think it'll be interesting to see, given we've started to see quarterly growth rates come off in the Sydney market. We've just had another cash rate at August. So it will be interesting to see if that carries on, given that the banks aren't necessarily passing on the full rate cuts as they were earlier in the year. So whether it has the same outcome or whether the market will continue to ease in Sydney is one that we should watch out for.
So we'll have to wait. Now, we better jump to your numbers to make sure we've got time for those,
Sure.
Charles.
Thank
Auction
you very
clearance
much.
rates.
Yes, very, very nice again this week. We had a slightly improved over this time last week. This time last year was 77%, so we're still below that at 76.9%, so it's pretty close to the way it was. The best performing marketplace, again, is Sydney, 80.4%. And I think that's one of the issues, though, when you look at your charts there. We expected the prices to stop, but if you look at the chart, they're dipping lower, but Sydney is still moving higher in certain areas than the charts are reflecting. That's a really interesting side to the whole thing, and that comes back to your supply and demand issue, which is the next question you're going to...
Yep, that's the supply. Homes
Really
advertised for sale.
This year.
Yeah, we've done it for 2 or 3 years. We'll get used to it one day.
Negative again, 0.68% negative. New Zealand had a 21.6% rise in stock over this time last week, and they had a decline last week, and we had an upside. So they're sort of hovering. They're either ahead or behind at this point in time, but it's good to see them get the stock because they need it. Their market's a lot hotter than our market here over in New Zealand. That's why the LVR situation where the banks introduced 40%. Yeah.
At least we haven't got it here. Rent price movements.
Not too bad. A slight climb. We haven't had anything massive when you look at it overall from right across the country. The best performing capital city was Hobart this week. It was negative last week, but it's up 1.49% this week, followed by Sydney at 0.28%. But the overall of all capital cities is up 0.24%. Over this time last week, and it's giving us a slight increase since we started this chart. So if you look at it for almost 2 years, there's only been a 0.24% increase in the average rental income across all capital cities. Not great, not a great there when you think about the way prices have gone.
And just finally, the vacancy rates.
Yeah, very, very good. Sydney, 1.56%. Melbourne, great at 2.4%. Perth, still worrying, 8.38% at Perth. It was in the 4s, 5s, jumped to the 7s, and it's been sitting in the 8s now. That's giving us an average over those 3 capital cities at 4.11%, Chris.
Now, I don't know if you were around for the first half of the show, but we were saying some of the graphs for kind of Sydney, Melbourne, Brisbane over the last 20 years. It all looks pretty stable.
I heard
what are
Tom
your thoughts
saying
on that?
something about it's the chart's all looking up or something, is it?
Exactly.
Is he happy
It's
about that?
all positive.
Is this it here?
Yeah, that's the one.
Oh, it's fantastic, doesn't it? Well, you know, the prices have continued to rise. I can tell you that from first-hand experience of properties that an apartment my daughter bought recently, and I thought she bought at the top of the market in Sydney. We had a valuation done. Now, valuers will have a tendency to value to a contract price or below, and they now valued only 6 months later or thereabouts this property at a 5% higher price. So it is still climbing.
Thanks for joining us, Charles. Eliza, always good to get you on. Thanks for bringing the figures. I just love those figures. So, yeah,
Sure.
Keep on pumping the figures up. That's all good. Thanks for joining us this evening. If you're watching Peter Switzer after this, I'm warning you that he's been at a Anthony Robbins seminar all day, so he'll be very rah-rah on getting you on the show as well. Anyway, we'll see you again next week. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.